Back in the 90s, McDonald's was everywhere. From New York to New Delhi, from Paris to Prague, the Golden Arches promised salty fries and great burgers. And the investors rejoiced as the fast food chain reached higher highs than ever before. You might think that the Germans were happy when the Berlin Wall fell, but trust me, McDonald's was happier. Forget the nuclear silos. If you want to know who really won the Cold War, look at the first McDonald's opening in Moscow in 1990. 30,000 people stood in line for a burger, not for democracy, but for the taste of the winning side. By the end of the 90s, McDonald's was selling burgers everywhere around the world, their stock climbing to about $45 a share. That was nearly a 10 times increase from where they started the decade at. And during the 2000s, their number of stores climbed to an unprecedented 32,000, with an average ticket price per famished customer of $6.50 by the end of 2010. And then, a funny thing happened by the end of that decade: the Great Financial Crisis, the 2008 collapse of the US economy that led the whole world into an economic recession. But the Golden Arches kept us shining even then, and the number of stores kept increasing as did the average ticket price. By the end of the next decade, the giant was even grander, with a stock price of over $195 a share and a staggering count of stores, reaching the 39,000. And just when everything seemed to be going their way, when the 2020s were just another decade for this hungry giant to keep on growing, something happened. Ozempic. Yup, the latest craze in fat loss diet. 100% not recommended to be used as such by literally every doctor, it might be the David to bring down the giant to its knees. The great McDonald's empire might yet crumble at the feet of a drug that targets the main capital of the fast food giant, our unending hunger. This is not just a simple drug. This is a societal shift of unprecedented proportions. The reduction of appetite as a solution to the high levels of obesity in the US and the world might yet bring forth a new human. One that simply does not have the hunger necessary to sustain the billion-dollar company that exported American fast food to the entire world. So, what will win? The indestructible giant of salty artery-clogging deliciousness, or the drug that ought to make us all thinner? And what can McDonald's and the other fast food businesses do to face their worst nightmare? A US that simply is not that hungry anymore. So, in order to fully understand the effects of Ozempic and other drugs like it, we must first look at what they do. At its core, they are not fat loss drugs. They're not meant as such, and they carry with them the potential side effects. But if you flood the market with a drug originally directed to people suffering from type 2 diabetes that also just happens to lower hunger, then it will find an audience. And trust me, the audience is there. McDonald's grew like crazy during the last 3 decades, but you know what else did? Us. By the end of the 90s, the US obesity rate was at a staggering 19%. That was scary even back then, and people already made the connection between fast food, and particularly McDonald's, and their expanding waistlines. It was in 2004 when Super Size Me came out, a documentary that alerted of the dangers of fast food consumption. Even the then President George Bush indicated in an interview that the relationship of Americans with fast food was a joke, and a dangerous one. But ultimately, he laughed it off as unimportant. This is perhaps to be expected when his dad, the previous President Bush, said that, "I do not like broccoli, and I'm the President of the United States, and I am not going to eat any more broccoli." Yeah, that is what I call a solid take on American health policy. Conclusion: by the time Ozempic was approved by the FDA in 2017 and became popular in the upcoming 5 years, the obesity rate had passed the 40%. This meant that in every family in America, there were at least one obese person. And this was not just an American problem. In Europe and the rest of the world, people were getting pretty fat too. Kinda puts into an uncomfortable light those thousands of new stores and a skyrocketing McDonald's price. So, now you go and tell all those people that Ozempic was not meant for them. The market was there, whether Novo Nordisk, the makers of the drug, knew it or not. And suddenly, everyone was using it. By 2018, the sales of the drugs were about $264 million. But just 3 years later, it had increased to $5 billion. By 2026, they are projected to be around $30 billion in revenue. That is an increase of 9,200%. So, okay, people are taking the drug that reduces hunger. What are the effects that this is having on McDonald's exactly? Well, the impact is being felt in two relevant KPIs for McDonald's. The first one is their lack of growth, or sometimes even fewer customers being served. The theory goes that a lower food drive amongst consumers is having a direct effect on the people that even open the doors to their establishment. We will talk about the effect that a change in the hunger response has on the people that still go to McDonald's, even on Ozempic, but the first damage felt is the fact that a company of the size of McDonald's, one traded in the stock market, does not only need to do well, it needs to actively grow. And the consumer base of the giant seems to have stalled the last couple of years. From 2022 all the way to 2026, McDonald's has reported either negative growth or just a tiny increase, with some years reporting even a 2% drop in the number of customers being served across all of their stores. This is not just a little bit bad, this is apocalyptic. This signals investors that McDonald's is a thing that is not growing, which is another word for old, which is another word for unsexy in Wall Street. Some might say that they are still making a lot of money, and they are. In 2025, they published a total revenue of nearly $27 billion. Not too shabby, give me some please. But in the stock market, it matters the future as much as the present. Perhaps even more. So, how much are you growing? How much the year after? You're big, sure, but I am also paying $285 a share to enter the company, so, you better deliver. The second impact that these drugs are having is thinning the margins on highly profitable products for the fast food giant. They advertise the burgers and the ice creams, but the real money is in the sugary drinks. You might feel robbed while paying like $27 for a Big Mac or something like that. But for McDonald's, that burger is just 55% profit, which to them is nothing, because ice cream, well, that is about 75% profit. And drinks, that Coke, that is essentially all profit, about 95%. And you want to know which items people on Ozempic tend to feel less interested in? You got it. It's the sugary drinks. So, fewer people ordering fewer high-margin items off the counter. That spells out the word apocalypse for a company that is not growing very much. That is why we can see that the revenues have gone up by 23% since 2021 and the stock price has increased about 21% in the same period. Wait, what? Now, if you look at the sheer revenue, the company looks strong. I'm not going to lie. The effect of the drug seems to be negligible at first, with McDonald's cleaning a tidy $28 billion as of 2025. But the devil is in the details. We already have spoken about the rise of Ozempic, with a special focus on their explosion since 2010, and how the fast food chain is actively losing about 1% of its customer base every year, more or less. And of the people that are actually bothering to go there, they are buying fewer of the high-margin items. This means fewer people buying less profitable items, but the company is making more and more money, so how could this be? Well, let's rescue a KPI that we showed on the introduction and see how the great American fast food company has managed to wage war on a country that dared to say no to the supersized fries, the average ticket price. This KPI measures the average price that a normal customer would pay for the privilege of eating at McDonald's. And believe you me, it is a privilege in the year of our Lord 2026. How much do you think a burger and fries with a large drink would cost? Assuming you're braver than me and decide to undergo the humiliation ritual that is to eat at McDonald's alone as a grown-up. Guess. No? It's higher? Well, if you said $13 plus tax, that would be correct. And even if it's cheaper than some places in Europe, looking at you, Switzerland, with nearly $19 for the same items, this is not precisely value. This is getting a bit expensive for a product that is, under no light, excellent. The average ticket price has gone up by 115% since 2016, reaching an uncomfortable $18 in 2026. Meaning that, just like everywhere else, the prices have risen dramatically to inflate those revenue numbers. The impact of Ozempic is real and powerful, hurting and limiting the ability of the company to project their earnings into the future. But the rising prices might be able to compensate for some of it. The rising ticket price is trying to squeeze out every dollar from the people that still go into the stores or order via the app. Fewer customers, paying more. But you know what products get to do that? Either staple products people cannot do without, or luxury brands that understand that their customers will pay higher prices for excellent products. Now, I personally don't think that McDonald's is quite there as a staple product, capable of withstanding an 115% price increase without hurting their demand. And it is certainly not a luxury brand. After all, they make burgers and fries. So, what is McDonald's doing to solve this issue? Simply raising their prices forever and expect people to treat them as a luxury brand? Or do they have a card up their sleeve? McDonald's is experiencing a bit of an identity crisis. During their origins and the great success they experienced at the end of the previous century, they became a brand of American values. Fast service, simple meals, and a fun experience for the whole family. I remember going with my grandparents to McDonald's sometimes and enjoying the experience tremendously. I would say that the feeling was positive towards the brand, and so they grew. But then, during the early 2000s, they became the guilty party number one, deservedly or not, to a nation getting fatter by the year, and the damage the supersized meat did to the brand, it never really fully went away. They were cheap and bad for you, like many other pleasures that we take shameful joy from. But now, they are not even cheap. And that is a powerful impact. There are fewer people being less hungry and being asked to pay more for a product that has not improved dramatically. Certainly burgers in 2026 are not 115% better than in 2016. So, what are they to do? Well, the answer to that question is a complicated one, but they have a few answers. One of them is the Big Arch Burger. This burger might seem similar to the supersized Big Mac, but the reality is that their difference marks a fundamental shift in the way that McDonald's is operating. The Big Arch marks, in my opinion, a shift from the classic fast food macro distribution of low fiber and high salt into a more protein-centric alternative. The double quarter-pound beef patty essentially doubles the amount of protein in the burger, and fats also rise considerably. Now, don't get me wrong, the burger is still a caloric bomb at 1,000 calories, but it might be just the correct new distribution of macronutrients to tempt the Ozempic brain back into the good graces of a type of food that was never really meant to be healthy. I repeat, I am not saying this is healthy or even healthier. I am not a doctor of any kind. And I imagine that if you're going to McDonald's, fitness is not your priority. But it is a concerted and clear effort of a company with thinning margins in their classic products and diminishing core client base, pivoting to satisfy the client habits of a society for whom hunger is no longer infinite. It is also an example of smart product making, to be perfectly honest. The idea that fast food could readapt to an Ozempic world by changing the macros of fast food is brilliant. And if it manages to bring some people back at the door, it will be an example to include in the history books. The world has changed under McDonald's feet. For nearly 50 years, the average American consumer got fatter as their profits and revenues and stores rose high into the stratosphere. America and the world were always hungry for McDonald's, and so their company profited from it all. Now, a new human has emerged, one that has rehacked the same brain centers that McDonald's took charge of with their salty treats and juicy burgers. A consumer that is free to choose different macro distributions thanks to the drug that pacifies the perennial hunger of the modern world, one that McDonald's definitely had a hand in creating. Now, the ball is on their court. They can lobby against Ozempic all they want. People in the US and the world have found a mechanism to rein the hunger in, and that is not going away. Remember that Ozempic sales grew 9,200% in 8 years. So, will the big art solve all of McDonald's problems? Probably not, but it is an ingenious left hook from one of the remaining great American companies from the 1980s. It proves that fast food does not need to mean salty and low-fiber meals. Sometimes it could mean protein-rich foods as well. Still, probably not healthy, but you need to justify those high prices, right?